Hello, VetaVA community. It is Hammer coming to you this week with Jessica Wells, our co-host today. Jessica, please say hello to everybody.
Hello, how are you all? Happy to be here.
And there's like a million people that are all like, yeah, it's like a giant concert. Yeah, no, everyone will hop on in a minute. Usually takes a few seconds. So anyway, hello, everybody. It is August 9th, 2023. I am Hammer here with your weekly mortgage market update, joined by this week's guest, Jessica Wells. Jessica, tell everybody a little bit about yourself.
I am a broker owner up in Olympia, Washington. Been born and raised in the Pacific Northwest and been in the mortgage industry for 19 years now. So
just getting the hang of it. That's good.
Yeah.
All right.
Kind of what I live and breathe right now.
So, all right, everybody. Well, you guys know how this goes. And if you don't, I'll tell you. If you've got any questions or comments, feel free to put those in. We do monitor those through the show. If you're here live, let us know. Give us a hashtag live. Say good morning or good afternoon, whatever it is in your neck of the woods. If you're a mortgage professional, VetaVA professional, say hello. If you're a consumer with any questions, of course, we want to hear from you as well. And many of you watch on the replay. I know that you can't make it live, but we do have a lot of analytics that show many of you do watch on the replay. So if you are watching the replay, do me a favor, put a hashtag replay. Let us know that you were here. And also, if you have any questions, we do monitor the post. It does help, though, if you tag Jessica Wells. She's a moderator with VetaVA. Or if you go ahead and tag me, Hammer, and we'll be sure to get you answers to your questions. So all that said, let's switch over to the slide deck and fast forward. So now we're going to go ahead and talk about rates. And remember, this is not an offer to lend. When we talk about rates, we're talking about averages and generalities. You, of course, want to shop around, find somebody you're comfortable working with that you trust, and of course shop around for your rate. With that said, take a quick recap and see what's happened since last week when we got together. Rates crept higher all of last week except for Friday. They had Monday, Tuesday, Wednesday, Thursday. They kind of got worse and worse a little bit at a time each day, but they fell back on Friday to end the week basically the same. The reason that happened was because of some jobs data that was released. There's a bunch of different jobs reports that came out last week, but the ones on Friday were the non-farm payroll report, as well as unemployment numbers and what we call wages or hourly earnings. And that's how much everybody is out there earning. And the more money people earn, the more money they have to spend, which can drive up the cost of goods. And that is what we call inflation. So sometimes when we see those numbers, that can cause markets to anticipate possibly higher pressure on inflation. And if we see a lot of new jobs created, that can do the same. But this was a pretty mixed bag. The data was actually showing that the labor market's still doing very well, but softening around the edges. And that's kind of what we want to see. We don't want to see people lose their jobs and see the entire labor market crash, but we do want to see it kind of slow down a little bit and give inflation a chance to cool off. So that is what we saw last week. And that's why on Friday, you may have seen interest rates on Friday or on Monday that were a little bit better than what you saw on Tuesday or Wednesday. And remember, interest rates move not only each day, but they can even move during the day. So they're based on the fancy little charts and graphs that I've showed you before, and I'll show you in a minute. Veteran VA rates averaging in the mid to high sixes. Jessica, you actually price out loans. I do not. What do you think? Is that what you're seeing as far as VA rates these days?
Yeah, that's what we've been seeing. Pretty high sixes, good credit. We're a little bit better because some lenders have the loan level price adjusters that bring them into the mid sixes. But for the majority of borrowers, we're high sixes for sure.
Yeah. And then, and you know, I guess even if somebody got in the low sevens, depending on their credit situation or some different things, that wouldn't necessarily mean they're being taken advantage of. Correct?
Correct. Yeah, we've got a couple low credit score borrowers that we're working on right now. They're definitely in the low sevens, but they're still getting into a home. So
yeah, I was going to say, and that's one of the amazing things about the VA loan is it has some of the best parameters to, you know, help somebody that might have had some credit challenges in the past. And definitely, even if you do have those credit challenges, check it out because buying a home is more, I want to say more available to you if you're able to use that VA loan versus what we call conventional or conforming conventional mortgages. So speaking of those conventional mortgages, the ones that if you're not using your VA benefit for, if there's any reason, those rates are generally going to be higher and they're averaging in the low to mid sevens. I don't really see many of those, if any, that have really, it's touch and go to see the high sixes. Most of them though, in the sevens. What about you, Jessica? Does that sound about right for your neck of the woods?
Yeah, we're seeing low to mid sevens. Investment properties are even in the high sevens or even a little bit higher because of the loan level price adjusters. So
right.
Definitely in the sevens on conventional products.
Awesome. So this week, a couple of things that y'all want to be aware of as far as where rates are kind of. And again, rates have been pretty consistent. They move up or down about 1/8% on average, day to day. You may see that movement, or you may see some changes to your closing costs. Either you're getting a larger credit or you're getting a lower credit, or if you're paying to get a better rate, what we call, discount points, you will find that you might be paying a little bit more or paying a little bit less. But generally, we haven't seen too much movement. Now, tomorrow that could change. Tomorrow we're going to get a very big report. It is what we call the CPI report, the Consumer Price Index. It is a consumer inflation report that basically highlights where things are headed. And here, let me go ahead and pop this out a minute. I'll show y'all. This is the Bureau of Labor Statistics, the BLS. They are the ones that create this index and release this report. And over the last 12 months or so, we've seen inflation improve quite a bit, which is what we want to see. And we'll see rates start to come back down as inflation continues to fall back down. So in June of last year, in what we call the headline inflation number, it rose up to 9.1%. And that's where it peaked. That was some pretty terrible inflation. Since then, as you can see from this fancy little chart, we see it go down a little bit further and further. And in June, it came down to 3%. And that was from the previous month where it was at 4%. And it doesn't always go down by that much of a change, though. You can see here from March to April, it only went from 5.0 to 4.9. This month, not likely to see as big of a jump as we saw last month. We're not looking to see it go from 4 to 3 to 2. More likely that we see something that is either slightly higher than that 3% is actually expected based on how it's compared to the previous year, or maybe a little bit better, but it's probably going to be higher than that 3%. And then what we call the core number, this is inflation that removes the costs of energy and food. And those are considered to be volatile and that they change quite often, especially energy when that's related to the price of gas, which is related to the price of oil and things like that. So the core number doesn't move as severely. You can see there's a much bigger drop with that headline number. This core number has been dipping from the 5s and into the 4s, and also expected to be 0.2% month to month. And I think 4.6, I think is what they're forecast. So let's see for the core, if I can catch it. And when I scan through here, I'm looking through, this is all the gobbledygook I read through for y'all so that we can give you these. So the core CPI is forecast to rise to 4.8. And the headline number is forecast to rise to 3.3. So even though we may see inflation that's not quite as good as the month before, that's still actually okay because of how it's compared to the previous year. The month-to-month numbers, it's expected to be 0.2%, which is very much in line with what we've been seeing recently, and we'll get there. So tomorrow, this data comes out at 8:30 a.m. Eastern time, and that data, if it does come out better than expected, we'll see rates that are going to improve a little bit. Last month, when we got the CPI inflation report, we actually saw rates get about 0.25% better for a few days because that report came in much better than expected, showing inflation was cooling off. So, however, if that data shows inflation is not improving enough, we could see rates move higher for the next few days. So if you are closing soon and your loan is not locked, I strongly suggest you talk with your loan originator, your loan officer, your mortgage person, and just discuss the merits of what you want to do with the loan. Guys, I love forecasting this stuff, and I can tell you that as much as in the past, I've been really good at reading the tea leaves. Right now, you might as well use the magic 8-ball. It is very much in the air. And, my guess, and this is a guess, and I put the word guess there on purpose because I can't even say my estimate or my forecast because that sounds too official. It's a guess. My guess, I think we're going to see rates stay the same or improve a little bit. I don't think we have to worry too much about rates moving higher. And if you are out home hunting and you don't have a house under contract yet, which means that you have most likely not been able to lock in an interest rate, I don't think you have much to worry about. we don't have to worry that rates are going to move up very quickly. Even if you see a move up for a few days, I think we do see them go ahead and move back down. Basically our overall forecast here is that rates could improve with good inflation data, but if they rise, it's likely going to be about 0.125 to 0.250. So what we call an eighth to a quarter% in interest rate. And it shouldn't go too much higher than that. I can't cap it for you, but if we were to handicap it, that's kind of where I'm going to put it. Next few weeks, rates are not likely to break out of the range that we've seen, which for VA rates has been, at the best, it's been in the mid sixes. At the worst, it's been in the low sevens. So we're likely to stay in that range. You're not going to see rates drop significantly from here until 2024 sometime, when inflation is definitely under control, when the Fed starts lowering their Fed funds rate again, and when markets maybe slow down a little bit. So that's kind of what I see. Jessica, anything you would add to any of that?
No, I think that's a pretty good recap of what we got going on here in my neck of the woods. I guess it's not. We're just kind of hoping that rates stay pretty level, not forecasting any big, huge changes going on for the rest of the year, basically.
So with that in mind, everybody, the question that we get all the time is, well, I really want to see rates come down. I don't like these payments I'm being quoted. Why would I want to buy a house now? Why not just wait until rates come down?
I think the big issue with waiting till rates come down is you're going to have everybody that's been waiting for rates to come down that's back in the market. And we already have a small inventory of homes for those people to buy. And I don't foresee that our inventory is going to double, triple, or even get much better. So if you wait, you're going to be fighting against a whole bigger crowd of people that are out there shopping too, that have been doing the same thing, waiting. So if you can buy now, you can, especially with a VA loan, you can do that VA IRRRL down the road when rates do get better, if that's the case.
And I flashed it down on one of the thirds on the screen. Some of the advantages to buying a home now, when there is a little bit less demand, when there's less people that are jumping in and offering on that same home, there's less of a bidding war. Homes are, it depends on the market. Like you said, you're in the Pacific Northwest. I'm in Western North Carolina on the East Coast. For us, we're still seeing homes go above asking price.
We're still seeing above asking price. There's still a bunch of cash buyers in our neck of the woods up here that are buying, and they'll go $50,000 over asking price just to knock anybody with a loan out of the game. I've seen it on a lot.
I don't know where all this money came from. Maybe people have good printers these days. I don't know, but yeah, there is a lot of cash buyers out there, and it's there. So if people are afraid of buying a house now, a lot of times though they'll say, hey, I think housing prices are going to crash. We're in a housing bubble. What do you say to your consumers, that ask you that question or bring up that concern?
I always go back to the simple supply and demand situation. Like, we're not in the market we were in 2008 when we saw the housing bubble. There is not a surplus of houses on the market without the people that are able to buy them. Right now we have the reverse, and we don't have the supply for the demand of houses. So I don't foresee them crashing, maybe leveling out to where that's kind of what they've done, a little bit of price correcting up here. But for the most part, I'm forecasting that they're still going to increase like they normally do year over year. But I can't see it for a housing bubble in the future.
Yeah. And for those of you that may not watch on a regular basis, one of the things I always emphasize is there's a very, very strong correlation between the housing market and the labor market. So what happens is right now, everybody is employed and making money, which means the housing market is free to stay strong with a lot of demand. The only time that you see a big drop in housing prices is when you've seen a big problem with the labor market, when you've seen unemployment jump, people have lost their jobs, they've been cut back. That's what happened back in 2008. Amongst some other factors that are definitely not variables this time around. And it's never something that we can guarantee you that home prices will go up, but over time they certainly will. And anybody that's ever talked to their parents about what they paid for a home, or maybe even their grandparents, my wife's mother, I remember they paid, I think, $17,000 for a house that we sold in New Jersey 6 years ago for $280,000. That is now worth $360,000. So, that's the kind of thing. Now, let's say somebody does buy a home right now and rates were to drop. Will they have any options in the future?
Yeah, definitely. Especially with the VA loan, you get that interest rate reduction, refinance the IRRRL. And it is one of the easiest loans you can do. As long as you're not looking to take any money out of the property and you're just reducing your rate, most lenders don't even need you to provide a pay stub. It's proof of your 12 months or most recent on-time payments, and that you still are living in the home. And you can even do it on an investment property if you have a VA loan on your investment property too.
That's awesome. It's good to know. Something that no one else has brought up. So that's definitely good for anybody that has might be in that situation. We are getting that question now more about, hey, I bought a house with a very low interest rate. Can I keep my VA loan and go buy a new house? I'm PCSing. Can I go buy a new house and keep that loan? And we've talked about in the past that, yes, you can, with caveats and requirements and, a bunch of different things, but it does put more people in a position where they have, what are now investment properties with that VA loan, and they no longer live there, and they could still, do that. And with these new current rates. So awesome. Well, is there anything else that you would leave everybody with, or anything you think we should kind of touch on or talk about for the vetted community about where rates are headed or where the market's going, or answering any questions that you might be getting a lot of time from your clients?
I think the biggest thing is if you're out there shopping right now, just stick with it. It is still a good time to buy. You're going to end up with a piece of land that you're going to earn equity over. It's the biggest source of generational wealth is buying a home. So don't let the current market scare you away, because there's always options in the future of what you can do. Even if you are stuck with the interest rates you have right now, if they do go down, you've got options in the future. If they go up, you have a fixed rate that you're not going to go up on.
Yeah. So absolutely. And again, as far as, some of the reasons why I don't think rates will move lower until sometime in 2024 is because the inflation's still an issue. The Fed's still holding their policy rates at high levels. They will not look to cut their policy rate unless inflation goes down and the economy starts to slow down and too much the other way towards a recession. We had thought we'd be neck deep in a recession by now. We thought that it would be a big slowdown in the economy, and yet I'm not seeing it. Neither are you. Yeah, I mean, you're on the totally opposite coast. But for example, I'm visiting family in New Jersey in August at the end of the month. We're talking 3 weeks from now. I went to book a hotel. Place is full. I'm like, are you kidding me? 3 weeks in advance, the entire place is booked out already. Same thing with different times I've tried to rent cars and airline flights and the costs there and things. People are out there, they're eating, they're traveling, the restaurants are full, the money's being spent, and we're not going to have a recession until that stops. So,
yeah, I agree. I agree. I just got back from a trip to Boston, and the flights were overbooked, and we ended up canceling a flight because they couldn't barely get me on the next flight the next day because the flights were so full. So there's people traveling all over the place right now, which is a good thing.
It is. Yeah. So, but all right. Well, thanks for joining us. We appreciate it. And everybody, remember, we do this each and every week. You know how it goes. Same bat time, same bat channel. Let's see. Where's that happy? There it is. So 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. Look forward to having you join us next week. And thanks again, Jessica, for being with us today.
Yeah. Thanks for having me.